Delta Airlines walked away from 2024 with $3.46 billion in net profit. That's not just leading the pack, that's crushing it. More than United, more than American, more than Southwest. Here's the crazy part. Delta's profit accounted for roughly half of the entire U.S. airline industry's earnings, yet they only hold about 20% of the market. How does a single carrier consistently dominate the profit game while everyone else fights for scraps? The real answer might surprise you. Because Delta's success isn't really about moving people between airports. Their winning formula comes from a playbook their competitors simply can't duplicate. A playbook centered on premium experiences, strategic alliances, dominant hub airports, and a loyalty machine that generates cash on autopilot. This is how Delta rose to become America's profit king, and their blueprint for staying there. Let's look at the numbers. 2024 was Delta's best year in company history. They pulled in $61.6 billion in revenue, a 6% jump from 2023. Pre-tax income reached $5 billion, operating cash flow hit $8 billion, and free cash flow landed at $3.4 billion. But here's what sets Delta apart from everyone else. CEO Ed Bastian projected that Delta's 2024 profit would make up roughly half of the industry's total gains, despite controlling just 20% of the market. That's a profitability ratio no other American carrier comes close to touching. Look at the competition. United Airlines pulled in $57.1 billion in operating revenue. Good for second place. American Airlines brought in $54.2 billion, landing third. When it comes to net profit, Delta topped the charts at $3.46 billion, with United trailing at $3.15 billion. American? Significantly behind. Delta isn't edging out the competition, they're running away with it. And it's not simply about revenue totals, it's about where that revenue comes from. Here's what most people don't realize. None of America's major carriers are especially good at profiting from actually transporting passengers. The real money comes from everything surrounding the flight. Delta isn't winning by carrying more travelers. They're winning by extracting more value from each traveler and from revenue streams completely unrelated to ticket prices. Let me show you exactly how they pull this off. Premium cabins are Delta's money machine. While competitors cram in economy seats wherever possible, Delta's moving in the opposite direction. They're ripping out economy seats and installing premium ones because the numbers speak for themselves. Premium cabin margins run 15% higher than main cabin, and 85% of frequent travelers come back to book those upgraded seats again. During the first half of 2025, Delta's premium seat revenue, think business class, climbed 6% to $10.6 billion, while main cabin economy revenue fell 4% to $11.7 billion. That's a seismic shift. Premium cabins are now approaching economy in total revenue, and the gap keeps narrowing. By 2027, Delta projects premium revenue will actually surpass main cabin earnings. So what's Delta actually doing? They're rebuilding their entire fleet around premium travel. Delta won business class on international routes featuring lie-flat seats with direct aisle access. First class on domestic flights with upgraded privacy. Delta Premium Select, Premium Economy offering extra legroom and better dining. Comfort Plus, Economy Plus that bridges standard economy and true premium. On their Airbus A350, Delta switched to a premium-heavy 275-seat configuration, retiring the 339-seat layout. Fewer total seats, more premium options, higher revenue per departure. Delta now generates over 50% of revenue outside their main cabin economy product, and they're pushing harder. Delta's leadership admitted that premium cabins were the airline's biggest missed opportunity in earlier years, saying, "We weren't selling them. We were giving them away through complimentary upgrades." That's over now. Delta stopped treating upgrades like party favors. Want premium? Pay for it. And travelers are happy to because Delta's premium experience actually delivers. In Q3 2025, premium cabin revenue jumped 9% year-over-year, showing sustained appetite for elevated travel experiences. The strategy is paying off. Delta is converting former economy flyers into premium buyers while simultaneously poaching business class passengers from rival airlines. The takeaway? Premium cabins aren't a luxury add-on. They're the core engine powering Delta's profit advantage. If premium cabins are Delta's engine, the American Express partnership is the supercharger. This is where Delta truly leaves competitors in the dust. In Q2 2024 alone, Delta earned $1.9 billion from their American Express relationship. Let that sink in. Nearly $2 billion in 3 months from credit cards. Delta is tracking toward $8 billion this year from American Express, still chasing their long-term target of exceeding $10 billion annually. For perspective, in 2023, Delta received $6.8 billion from American Express through their co-branded credit card deal. CEO Ed Bastian told investors that approximately 1% of the entire American economy flows through Delta-branded credit cards. Process that for a moment. 1% of the entire U.S. economy runs through Delta Plastic. About 1/3 of Delta's active SkyMiles members carry a Delta co-branded American Express card. That penetration rate beats every other U.S. airline. Delta President Glenn Hauenstein told investors that spending growth in their co-branded card portfolio should continue outpacing the broader credit card industry. Why is this partnership so lucrative? Unlike airline tickets, a brutally competitive, razor-thin margin business, selling miles to American Express is essentially pure profit. Here's the mechanics. Cardholders swipe their Delta American Express at restaurants, gas stations, supermarkets. American Express pays Delta for the miles those customers earn. Delta collects cash immediately, before anyone redeems a single mile. When redemption happens, Delta fills seats that might have flown empty anyway. It's financial magic. Combined with other products including premium seating and cargo, Delta's diversified revenue streams accounted for nearly half of their total 2024 revenue. And Delta keeps pushing forward. Delta executives specifically highlighted Austin and Raleigh as central to their credit card growth strategy. Why Austin? Why Raleigh? These are high-income, high-growth markets where Delta has acquired massive numbers of cardholders. Delta isn't just selecting routes based on passenger demand anymore. They're selecting routes based on credit card acquisition potential. The numbers paint the picture. In 2024, American generated $6.1 billion from AAdvantage, while Delta pulled in $7.4 billion from SkyMiles. Delta earns $1.3 billion more than American from loyalty programs. That difference? That's what separates industry dominance from playing catch-up. This isn't merely a revenue line. It's a competitive fortress that's nearly impossible to storm. Delta's profit advantage isn't just about products they sell. It's about geography. Delta operates differently than United and American. Delta has consistently chosen to anchor operations in smaller cities, passing on major metros like Chicago, Houston, and San Francisco in favor of Atlanta, Seattle, and Detroit. The reason? In smaller cities, Delta can achieve total dominance. Atlanta is the jewel in the crown. Hartsfield-Jackson International processed over 23.5 million Delta passengers in 2021, making it Delta's largest and busiest hub globally. Atlanta isn't just massive, it's impenetrable. Delta controls that airport. They dictate pricing. They face virtually zero meaningful competition. But Delta has multiple strongholds. They maintain fortress hubs in Atlanta, Minneapolis-St. Paul, Detroit, and Salt Lake City, major airports where Delta commands dominant market share in both international and domestic travel. These are markets where Delta is essentially the only major international option and where they absolutely own passenger traffic. The benefits are enormous. Less congestion translates to better on-time performance. Operating costs run lower than battling for space in New York or Chicago. Pricing power flows from passengers having limited alternatives. Room to expand without capacity bottlenecks. Detroit has become Delta's fastest-growing hub. Q2 2025 movements increased 9% versus the prior year, compared to 5% for Minneapolis and 8% for Atlanta. Here's the strategic logic. Delta routes passengers through these hubs rather than depending on point-to-point traffic. Secondary market hubs make tremendous sense for airlines like Delta that plan to connect passengers through central facilities rather than filling planes with local origin-destination traffic. While United fights for gates at congested Chicago O'Hare, Delta moves passengers seamlessly through uncrowded Detroit and Minneapolis. The outcome? Delta achieved an on-time rate exceeding 83% in 2024, highest among all North American carriers and 2.53 percentage points above their nearest rival. Delta captured the Cerium Platinum Award for operational excellence 4 years running. Operational reliability isn't just a customer satisfaction metric, it's a profit multiplier. On-time departures mean reduced costs, fewer hotel compensations, happier travelers, and more customers willing to pay premium prices for dependability. Delta's Fortress Hub approach gives them the runway to deliver that reliability and capture the profits that follow. So why can't United and American simply replicate Delta's approach? Because certain advantages are unreplicable. First, the American Express partnership. Delta stands alone among major U.S. carriers in the strength of their American Express deal, generating $7.4 billion in 2024 versus American's $6.1 billion from AAdvantage. United and American have credit card partnerships too, but they're fragmented across multiple banks, Chase, Citi, Barclays, diluting the value. Delta's exclusive American Express arrangement is far more profitable. Second, the refinery. Delta is unique among major U.S. carriers in owning an oil refinery that generated $4.6 billion in revenue during 2024. Delta acquired the Monroe Energy Refinery in Pennsylvania back in 2012. It's controversial and profitability fluctuates yearly, but no other American airline has this fuel cost buffer. Hub geography. You can't relocate a hub overnight. Delta holds unmatched leverage at fortress hubs like Atlanta, Detroit, and Minneapolis. For longtime Delta customers, these airports are unavoidable. United is locked into Chicago competition. American is tied to Dallas and Charlotte. Their hub locations were cemented decades ago. Fourth, debt structure. In 2024, Delta paid $747 million in interest expenses, while United paid $1.6 billion and American paid $1.9 billion. American flies the newest fleet, but they're buried under debt payments. Delta strategically operates older aircraft with lower capital requirements. Fifth, brand equity. Delta's brand enables the carrier to command a 114% unit revenue premium versus other U.S. airlines, plus a net promoter score 26 points higher than fellow network carriers. That's not marketing spin. That's genuine pricing power. Passengers willingly pay more for Delta because Delta spent years cultivating a reputation for reliability, premium service, and customer satisfaction. Delta ranked first in punctuality for 2024, with over 83% of flights arriving on schedule. So what's the conclusion? Delta didn't stumble into becoming America's most profitable airline. They engineered a system that monetizes every possible angle. Premium cabins delivering superior margins. A loyalty ecosystem generating billions from everyday credit card spending. Fortress hubs where they dominate markets and manage costs. Operational excellence that builds customer loyalty and brand value. Strategic partnerships competitors can't easily match. CEO Ed Bastian captured it perfectly. Our differentiated strategy and best-in-class operations combined with demand strength and an increasingly constructive industry backdrop position us to deliver the best financial year in Delta's 100-year history. Delta isn't simply operating an airline. They're running a premium travel experience company that happens to fly planes. And as long as passengers keep paying for upgraded seats, swiping Delta credit cards, and choosing reliability over rock-bottom fares, Delta will remain on top. Because in the airline business, profitability isn't about carrying the most passengers. It's about carrying the right passengers in the right seats through the right hubs with the right partnerships. And right now, nobody executes that better than Delta.